We look for people that know their businesses, love their shareholders.
Finding great CEOs is vitally important to finding great companies. Buffett says it's almost as important as finding a great business model.
There's an enormous difference in the talent of American business managers. The CEOs of the Fortune 500 are not selected like 500 members of the American Olympic track and field team, and it is not the same process, and you do not have the uniformity of top quality that you get with the American Olympic team in any sport. You do not get that in top management in American business. You get some very able people, some terrific people, like a Bill Gates that we just mentioned, but you get a lot of mediocrity too.
I think that looking at the top of an organization, the CEO, is a great way to inspire future study. Barron's recently released their list of the top CEOs of 2024, and the list has some unexpected names on it. We've got Tim Cook of Apple, who's ushering in AI and continuing to be a supply chain savant, to Jamie Dimon, the long-term CEO of JP Morgan, whose very comment of an eventual retirement sent the stock down 4.5% this past spring. But he's also led the company to some major outperformance. During his entire tenure since 2006, he's averaged an 11.9% return on the stock, compared to the S&P 500's 10.4%. Then, of course, there's Jensen Huang, who, aside from signing women's chess like a rock star, has also led NVIDIA to gain 166% this year. And then a less expected name is Doug McMillon from Walmart, who is credited with bringing the big box retailer into a new era of e-commerce. There are some interesting things happening at Walmart. The business is attracting a new higher income customer, and their entrance into India is going really surprisingly well. We have the co-CEOs of Netflix, Ted Sarandos and Greg Peters. That's right, I said co-CEOs. Sometimes two is better than one. Did you know that the Harvard Business Review published a study in 2022 that says on average, co-CEOs outperform solo bosses? That's kind of wild, and I didn't see that one coming. And I can't really name another S&P 500 company that has co-CEOs. Netflix has surged 51% over a one-year period, compared to the S&P 500's 27.9%, which is nothing to laugh at. And the company's cash flows are surging right now due to increased revenues from their password sharing crackdown. And then we have some of the other Magnificent Seven CEOs that you would really expect on this list. We got Zuck from Meta and Satya Nadella from Microsoft. Nothing really surprising there, and you probably can figure out why their stocks are surging and why they made the list. Then we have less obvious names, two of which I'm going to research further. We have Fran Horowitz, Abercrombie & Fitch's chief. Her stock has outperformed the Magnificent Seven. The stock is up, get this, 360% in 1 year. Under her leadership, Abercrombie has refined its target audience, previously teenagers, to focus more on 20-something-year-olds. And they are tailoring their products and marketing campaigns to those shoppers. They've also invested heavily in e-commerce. They've trimmed overhead expenses and redesigned their stores to fit a new, inclusive aesthetic. The market cap of the business is still very small, $8.57 billion, and their PEO sits around 20. I just finished watching a Netflix documentary on Abercrombie's earlier days called White Hot, and that company was borderline evil at that time. So it's really cool to see that their new CEO is ushering in a new era. And an $8.57 billion market cap is pretty small. And if they've cracked something with the 20-something-year-old shopper, there could be a lot more future gains for them. And then finally, we have Larry Culp at GE Aerospace. The Culp arrived in 2018, and if you know anything about GE's performance during the 10s, they're a falling giant. Culp entered, and he started selling assets and split GE into 3 companies. He basically Jack Welched the business. The 3 companies are GE Aerospace, which retained the original GE ticker, and they continue to focus on aviation technology, mostly airplane engines. And then you have GE Healthcare, which spun off and has a new ticker, GEHC. That division focuses on medical technologies and healthcare solutions. And then you got GE Vernova, which is their energy division, and it trades under ticker GEV. This unit encompasses GE's power and renewable energy businesses. Larry Culp stayed as CEO of GE Aerospace, and whoo boy, he has been growing this thing like wildfire. The stock is up 83% over a 1-year period. And then last but not least, and this is the one I'm really excited to research further, we have Dara Khosrowshahi of Uber. He has led Uber from being a scrappy young startup to a predictable, profitable business. Or so it seems right now. I have not sharpened my pencil on this one yet. But if you've watched Super Pump, and if you haven't, I highly recommend it, which covers the early days of Uber, you know that they used to burn cash like it was going out of style. But then Dara entered, and the business is now providing consistent, profitable growth at scale. And that was his whole goal coming in. And we're really starting to see the fruits of that labor. Operating margins should top 7% this year. And Wall Street is expecting at least 10% net margins by 2025. And the business announced a $7 billion stock buyback because they have increased cash flows. Shares are up over 70% this year. I do take issue with the gig economy a little bit, and the fact that the drivers only take 25% of the ticket price is not right in my opinion. I will have to investigate to see what the actual relationship looks like, because I do believe investing does have impact and is our small way of voting with our dollar. So I will need to do research on that, but I really do like the way the company is progressing. And the other concerning factor is there could be all of this upside already baked into the stock price. So I'll have to value this thing. And during the course of my Airbnb research, which if you want to check out is on our Flink platform, I noticed that valuing a two-sided marketplace is actually pretty hard. So this was my first time at it, and I'll let you know how it goes. So the two companies that I'm going to research further are Abercrombie & Fitch and Uber. I like the way both companies are going, and because of my Lululemon investment, I'm kind of reading everything I can find on the retail industry because I'm concerned that I got into the stock without really understanding the industry. So I'm trying to make up for lost time. I really enjoy doing industry research. So we're building a web application to do just that. I have a public portfolio where I'm showing you what I'm investing in. It's currently 60% in short-term government bonds, waiting to deploy while I find a company that I want to invest in. 10% of it is in Disney, and about 30% of it is in Lululemon. Speaking of that $60,000 in short-term government bonds, if you're like me, right now with how frothy the markets are, you're probably having a hard time finding a great company trading at a fair price. And there's good reason for this. My favorite indicator, the Buffett Indicator, just hit a record high. I love the Buffett Indicator because it is a perfectly simple yet robust little indicator. It simply takes the market capitalization of the entire US stock market and divides it by GDP. Back in 2001, Buffett told Fortune magazine that this was probably the best single measure of where valuations stand at any given moment. And that same Fortune magazine article can still be found on Berkshire's website. And in that article, Buffett said, if the ratio approaches 200%, as it did in 1999 and 2000, you are playing with fire. Well, folks, the indicator just went above 200% this past week. So valuations are unquestionably high right now. What do we do with that information? The fact of the matter is nobody knows where the stock market is going. Nobody. It's a fool's errand if we try to time the market. This has been proven true time and time and time again. But we can know the temperature. The jobs market is also cooling down. But fortunately for us, the Fed has a dual mandate: to minimize inflation to about 2 or 3% and to maximize employment. This article from Business Insider makes the case that the Fed should start cutting rates because the job market is struggling. And I would wager to bet that if the Fed cut rates right now, we would see an adrenaline rush in the stock market, not a pullback. So the fact of the matter is we simply have no idea where things are going. But one thing I know for sure is that there are absolutely undervalued businesses today. It's just a matter of us turning over stones to find them. Just because the Buffett Indicator is flashing red right now does not mean that there aren't any companies to invest in. It's also important to note that there are some shortcomings to the Buffett Indicator. It doesn't account for the fact that many US companies are making more and more sales abroad. And since it only takes into account US GDP, it doesn't take into account abroad sales. So there's definitely opportunity out there. That's all for this video. If you enjoyed it, please consider giving us a like and subscribe. And if you're new here, hey, I'm David. I'm the founder of Flank Investing. I believe that intelligent investing should be less boring, overwhelming, intimidating, and lonely. We believe that the information diet that is given to us on the mainstream internet is absolute crap, that is meant to elicit an emotional response, basically FOMO, to get you to make a thoughtless decision. And that's not the way that the greats invest. We also have a ton of features rolling out weekly on our Flank investing platform. We have early access given to our Patreon members, and I'll also meet with you one-on-one to get product feedback, and you'll be a key player in deciding the future of Flank. Right now we only have 4 paid subscribers. 2 of them are me for test accounts, 1 is my dad, and 1 is Matt O'Dowd. Thank you very much, Matt, and I hope that by the next video we have a couple more names on that list. And if we don't, it's okay, it's kind of funny. That's all, and we'll see you next time.